Let's be honest, most traders fail miserably, and it's not because they can't find a winning strategy. It's because their plan is just a random collection of thoughts, feelings, and vague ideas rattling around in their head. That's a flat-out recipe for disaster. It leads to revenge trading after a loss, FOMOing into garbage trades, and letting your emotions completely wipe out your account. When your brain gets tired from making too many choices, your discipline evaporates and you start making mistakes. It's a real phenomenon called decision fatigue, and it is a silent account killer for countless traders. But what if you had a written document that took all the guesswork out of the equation? A literal blueprint that forced you to execute with ice-cold discipline, day in and day out, even when you're feeling stressed or exhausted. That's exactly what I'm going to show you how to build in this video, step by step. By the end, you will have a rock-solid trading plan that will become the bedrock of your entire trading career. Look, the single biggest reason traders blow up isn't a bad strategy, it's having no written strategy at all. If your plan isn't on paper, it doesn't exist. It's just a wish. An unwritten plan is an open invitation for fear, greed, and hope to hijack your decision-making. A written plan, on the other hand, is a business plan for your trading. It's designed to make your decisions objective, systematic, and frankly, a little boring. The goal here is to defeat decision fatigue before it even starts. Think about it, every single choice you make during the day drains your mental battery. When that battery is empty, you default to impulsive, emotional decisions. A professional trader designs systems to minimize those in-the-moment choices. All the hard thinking is done before the market opens. During the session, they are simply executing, not guessing. In this video, I'm giving you the exact blueprint for that system. We're going to build your plan using 6 essential pillars. This is the document that will force you to be disciplined and trade like a business owner. We'll cover everything from your highest level goals down to the nitty-gritty of your daily routine. The first pillar, your trading goals and market philosophy. The why. The first and most critical pillar of your plan is defining why you are even doing this. This isn't just about making money. It's about what you believe to be true about the markets and what you're trying to accomplish. First, your financial goals. Get specific and be realistic. Make a lot of money is not a goal, it's a dream. A real goal sounds like this. Achieve an average monthly return of 3% while never letting my maximum drawdown exceed 10%. See the difference. It's measurable. You can track your progress and know exactly if you're on target. Break it down into weekly or monthly milestones to keep yourself locked in. Next, and arguably even more important, is your market philosophy. This is a short, powerful statement about your core beliefs. It's your psychological anchor in the middle of a chaotic storm. For example, your philosophy might be, I believe the market is a game of probabilities, not predictions. My edge comes from executing one proven setup consistently over hundreds of trades, not from any single trade. I am a bricklayer, not a home run hitter. I will lay the same perfect brick over and over again. This statement is what you come back to. When you're tempted to chase a hot stock or you're stinging from a loss, you reread this. It reminds you that trading is a long-term game of probabilities and helps you regulate the emotions that are trying to sabotage you. The second pillar, your trading style, the when. Now that you know your why, let's define your when. Your trading style has to match your personality, your lifestyle, and the amount of time you can actually commit. There's no perfect style, but there's definitely a wrong one for you, and choosing it is a fast track to burnout. So, are you a day trader? This means you're in and out of all your trades within the same day, living on the short-term charts like the 1-minute or 5-minute. This style demands your full, undivided attention during market hours. It's for people who can dedicate a serious chunk of their day to the screens. Or are you a swing trader? This style involves holding trades for several days, maybe even a few weeks, trying to capture a single swing in the market. You're likely using 4-hour or daily charts. This is often a great fit for people with jobs or other commitments since it requires less babysitting. Or maybe you're a position trader. This is the long game. You're holding positions for months or even years, based on big-picture macro trends and fundamental analysis. This requires tremendous patience and the ability to completely ignore the day-to-day market noise. Be brutally honest with yourself. Don't pick day trading if you have a demanding 9 to 5. Don't pick position trading if you have the patience of a gnat. Write down your chosen style and the timeframes you will live on. For example, I am a swing trader. I will only analyze the daily and 4-hour charts to find my opportunities. The third pillar, your markets, the what. Listen, you can't be an expert in everything. It's impossible. Professional traders are specialists, not generalists. This pillar of your plan defines what you will trade. Spreading yourself thin across dozens of markets is just another way to invite decision fatigue. First, pick your asset class. Are you trading stocks, Forex, crypto, or futures? Each one has its own personality, its own quirks, and requires specific knowledge. Start with one and master it before you even think about expanding. Second, create a small, focused watch list. Instead of trying to scan 5,000 different stocks, build a universe of 20 to 30 high-quality instruments that actually fit your strategy. These could be stocks in one specific sector, a handful of major Forex pairs, or the top cryptocurrencies. Your plan needs to state this clearly. My universe of instruments is the top 10 currency pairs by liquidity. My active watch list for the week will be narrowed down to the 3 to 5 pairs that are showing the cleanest trends. This rule is your filter. It stops you from chasing random, low-quality setups on a whim. It forces you to become a specialist in a small pond, where you start to recognize patterns and nuances that most other traders will miss. All right, we're halfway through building your professional-grade trading plan. If you're getting value from this blueprint and you want more structured, no-nonsense content to seriously level up your trading, do me a quick favor and hit that subscribe button. It helps the channel a ton and you won't miss what's coming next. The fourth pillar, your entry and exit criteria, the how. This is the engine of your entire trading plan. It defines the exact, crystal clear, non-negotiable rules for when you get into a trade and when you get out. This section has to be so clear that you could give it to a complete stranger and they could execute your trades for you perfectly. Vague garbage like buy when it looks bullish is strictly forbidden. Your entry criteria should be a simple checklist. For example, 1. Is the price above the 200-day moving average, confirming the primary uptrend? Check yes or no. 2. Has the price pulled back to a key support level on the daily chart? Check yes or no. 3. Is there a clear bullish candlestick pattern, like a hammer or engulfing bar, on the 4-hour chart to trigger my entry? Check yes or no. You only pull the trigger if you can answer yes to all 3 questions. No exceptions, no almosts. This kills hesitation and second guessing. Just as important are your exit rules. For every single trade, you must define 2 exits before you even think about clicking the buy button. 1. Your stop loss. Where will you get out if you are wrong? This is not a mental stop, it's a hard order in the system. For example, my stop loss will be placed when a TR average true range below the low of the entry candle. 2. Your profit target. Where will you take your profits if you're right? This could be a fixed risk-reward ratio, like 2 to 1 or a specific technical level. For instance, my initial profit target is the most recent swing high, which must offer at least a 2 to 1 risk-to-reward ratio. When your rules are this specific, trading becomes systematic and, well, boring, and that's a fantastic thing. It means your system is working and your emotions are sitting on the sidelines where they belong. The fifth pillar, your risk and money management rules, the how much. This right here is what separates professional traders from amateur gamblers. This pillar is designed to do one thing and one thing only, keep you in the game. Your strategy will have losing streaks. Great risk management is what ensures you survive them to trade another day. There are 3 life-saving rules you must write into your plan. First, your risk per trade rule. This is the absolute maximum percentage of your trading capital you are willing to lose on any single trade. For 99% of traders, this should be between 1% and 2%. This is non-negotiable. I don't care how perfect a setup looks, the rule is the rule. This one habit prevents any single trade from crippling your account. Second, your daily or weekly loss limit. Think of this as your personal circuit breaker. It protects you from yourself on those bad days. For example, if I have 3 losing trades in a row, or if my account is down 3% on the day, I will shut down my platform and walk away, period. This is how you stop revenge trading and the emotional death spiral that always follows. Third, position sizing. Your position size is a mathematical calculation, not a feeling. It's determined by your risk per trade rule and the distance to your stop loss. If you're risking 1% of a $10,000 account, that's $100 per trade. You then adjust your position size so that if your stop loss gets hit, you lose exactly $100. This ensures your risk is perfectly consistent on every trade, no matter what. These rules are your armor. They are the most important part of your long-term survival. The sixth pillar, your trading routine and journaling, the discipline. Finally, a plan is totally useless if you don't have a routine to execute it and a process to review your performance. This pillar turns discipline into a habit. Your plan must define your daily routines. Pre-market routine, the prep, what do you do before the market opens? This might sound like every morning, I review my watch list, identify potential setups that meet my checklist criteria, check for any major economic news, and reread my market philosophy. Post-market routine, the review, what do you do after the market closes? This is where your trading journal becomes your most valuable tool. Your plan must state, I will log every single trade in my journal, including a screenshot, my reasons for entry and exit, the outcome, and how I was feeling during the trade. Journaling is non-negotiable. It's what turns your trading into a feedback loop for constant improvement. Your journal is where you find out if you're actually following your plan, what's working, what's not, and where your emotional weaknesses are. It's how you truly learn from your losses and get better. Your routine is the engine that brings your trading plan to life. It automates your best practices and makes disciplined execution your default behavior, not something you have to force with willpower. So there you have it, the 6 essential pillars of a professional trading plan. You now have the blueprint to stop being a gambler and start acting like the casino. You have a system that defines your goals, your style, your markets, your entries, your exits, and your discipline. There's no more guessing, no more trading based on fear or FOMO. You have a structured, repeatable plan that, when you follow it, will force you to execute with discipline and give you the best possible shot at long-term, consistent success. This document is your business plan, your boss, and your psychological shield, all in one. Your job now is to put this to work, and finally, drop me a comment below, which one of these pillars is the hardest for you to stick to. I'll do my best to answer every single question. Thanks for watching, and don't forget to subscribe for more content on how to trade with a real professional edge.